Hello everyone out there, this is Peter Harris for Commercial Property Advisors. I hope you're all doing well today. We get the awesome privilege at our company, Commercial Property Advisors, to educate, teach our students to own and operate and invest in commercial real estate all across the nation. One of our last student deals, the student's name is Jaden, okay? And the property, the picture of his property will appear right here. It's a 48-unit apartment building that Jaden purchased for $3.6 million. He raised $595,000 for the down payment from investors. So he syndicated the deal. But the best part of it is two things. Number one, he owns over 40% of the property, right? With all his investors, Jaden is taking 40% of the deal. But guess what? He only put in $30,000 of his own money into the deal. How in the world did that happen? Well, two things. Number one, he got the right help. And number two, he avoided the three biggest mistakes apartment syndicators make. So in this video, I'm going to share with you what those are so you don't make those mistakes and so that you can put yourself in Jaden's shoes. Let's get started. All right, we're going to start with probably I see as the biggest mistakes. I have deals coming across my desk every week. I take a look at them. Sometimes I give a thumbs up. Sometimes I just shake my head at who put this together, right? And the reason why I react like that is because a lot of the beginning, even intermediate syndicators make a mistake with being overconfident in a Proforma, which I'll go over in a second. A Proforma is how you project your income and expenses, okay, for an intended result. Now, what I'm going to share with you here will save your behinds from making big mistakes. All right, so let's get started. All right, so an overconfident Proforma, right, meaning you being overconfident in what the property can do in the future, it's going to lead to you missing your investor payouts and missing your projections, okay, of how the property could do. That's what you don't want to happen. That's the anti-role of a syndicator, okay? And you don't want to miss investor payouts, right? So most times the overconfident Proforma, we'll start with the three sections here. The first one is rent. So for any given deal that you syndicate, you are let's say you have your actual rents at $900, you have your Proforma rents at $1,200. So you believe that once you renovate the units, get the thing stabilized, you can go up to $300. I'll say $1,200, okay? And then the problem is, right, because you're overconfident, in reality, you can only reach 1,000. So you didn't reach 1,200, you reached 1,000. When this happens, you just miss your investor payout and you lose face with the investor. Okay? Now, the solution to this is to know to the intimate detail of your rental comparisons, your competition around the area, what their rents are, what their rents could be, right? Number two is you need to have a local expert, the local property manager who operates apartments just like yours with the higher rents and getting their buy-in of you taking your rents to the future rents, okay? Because they're the ones signing the lease. They need to budget this out themselves and believe in it themselves that you can achieve those rents. That this is not just based upon your data, okay? That's being overconfident, okay? And number three is experience. You have to have experience in knowing how this can go up. You got to have that gut. That only comes from experiencing gray hair, okay? All right, number two, the second mistake here with being overconfident is not understanding thoroughly your deal cap rate versus your market cap rate, okay? Your deal cap rate is the cap rate of the actual deal. The market cap rate is what the cap rates are of your competition, okay? So ideally, you want your deal cap rate to be higher, end up higher than your market cap rate, okay? Now, today's market cap rates, market cap rate compression is not happening. Let me explain that, okay? In years past, prior to this year, market cap rates have been slowly dropping. They don't move very quickly. Slowly dropping. When market cap rates drop, property values go up. Okay? So today, the market rate compression, meaning going down, is no longer the case. It has either stopped or it has dropped slightly. That means property values aren't skyrocketing like they used to. Okay? So that means if you project, right, when you're going to do a refinance or a refinance to pay out investors or a sale to pay out investors, if you project at 5.75, okay, and you miss it, but it ends up being 6%, so you miss it only by a quarter point, guess what happened? You missed your investor payouts. You have egg on your face with the investor because, again, you were overconfident in your Proforma. Got it? Okay, I hope you follow me in this. The solution is to underwrite conservatively. That is the solution. How do you underwrite conservatively? Through experience and having data to back up your decisions, having experience to back up your decisions. All right, so this is really important. Okay, all right. The third one is this is a biggie too, right? And this is easy to resolve, but hard to kind of predict, right? So number 3 is underestimating operating expenses on the property, right? So when you underestimate expenses on the property and you have higher than expected expenses, guess what happens? Your NOI drops, which means your cash flow drops, which means your property value drops. Got it? Okay, so the 3 biggest areas that I see apartment syndicators messing up on is on repairs, maintenance, and supplies, right? They miss this area only because of lack of experience. They do not own properties in this part of Texas, for example, right? And they underestimate what repairs and maintenance supplies will cost in this area. Did you know that if you were in Dallas, as opposed to you go 40 miles east, you know that expense ratios are different? Okay, just by a 40-mile difference, they're different. Okay, we have that data. All right. The second area where they mess up with operating expenses is capital expenditures, right? So you get into operating a property, and all of a sudden you open up a wall during your renovations, and poof, you got to change the entire plumbing stack. Like, OMG, I don't have money for that. Or you're out there mowing the lawn, you look down, you see a puddle of water, right? Oh, it's nothing, but it is something. An underground pipe just burst. Oh, that's $8,000. Been there and done that. Okay, so those type of things can happen if you underestimate in your budgeting operating expenses and capital expenses. And number 3, what can ruin your operating expense budget is having a poor property manager. Okay, all right. So the solution here is data. You have to have data. As you know, our company, because we gather data from all across the country, we can tell you what operating expenses could be in Oklahoma City versus Dallas, Texas. We can, and there's a big difference there. Okay, and next is know-how. Know-how meaning you have to know how to manage the management, and that's a skill to take. Okay, because well, I won't go there, but you know, property management is a very important part of being an apartment syndicator. Okay, all right. Okay. That's just number 1. That was number 1, an overconfident Proforma. Okay, it will cause you to miss investor payouts. Now, that was just number 1. Let's go to number 2. Here is the second biggest mistake that apartment syndicators make. Number 2 is giving away too much to the investors. Here's what I mean by that. Sacrificing the purpose of commercial real estate investing at the altar of having commercial real estate ownership. Here's what I mean by that. As you may be a beginning apartment syndicator investor, okay, you wanting so badly to be a commercial real estate investor that you give up too much equity or too much ownership, but you do all of the work. Don't do that. Don't do that, right? We, as I mentioned before a few minutes ago, our student, Jaden, raised $595,000, right, for his 48-unit apartment building. He contributed $30,000, and he got to own over 40% of the deal. How did he do that, right? How did he do that? He did that because he knows his worth, okay? He knows his worth. We have another student right here. I show you the pictures here. These are students that their investor put in all the money, and they split the deal 60-40. How do they do that? How in order to do that, right? That's the direction I want you to go, is both of those students knew their worth, okay? Here's what they're worth, okay? They studied with us, okay? They found the deal, and it took months to find the right deal. Each of their deals has a 2x multiple. That means in 5 years, they have doubled their investor money. Now, before joining our program, they couldn't do that, right? So isn't that a skill worthy of being compensated for? If you can take someone's money in 5 years, double it. Do you have that skill now? You probably don't. They do, so it's worth something, okay? Next is they arranged the financing, and both deals had favorable financing. They've done all the due diligence. They're working on working on managing the property management, and they're using our software and third-party software to manage the whole thing. Isn't all of this part of knowing your worth and why you should be compensated accordingly? Got it? Okay. Now the second thing is not only knowing your worth, but know how much to give away. You have to know that, right? So yeah, Peter, I know I'm worth all this, but how much do I give away? Well, in order to calculate that, okay, you have to know the following things. You have to know your deal's ROI, your return on investment. You have to know how to calculate your investor's return on investment. You have to know how to conservatively put together a Proforma to look at the future, as we discussed a few minutes ago. And also, you have to know how to measure the market's performance for a given deal. And all of this information needs to be in one spreadsheet, so you can see everything while sitting in front of you, talking with your coaches, so you can understand how the deal is going to perform, so you can predict what the returns could be, so you can tell your investor, I could pay you this, and actually meet those expectations. Okay, so you have to know all of this, right? Okay, so this number 2 is probably the most important thing here is for beginning syndicators, giving away too much. I hope you understand that right now. Okay, all right, let's go to number 3. All right, here is the final one, the third biggest mistake apartment syndicators make. All right, number 3 is not monetizing dead deals. Okay, every deal that you look at is not going to close. Okay, every deal that's a good deal, you have the utmost intention to close on it. For whatever reason, okay, that good deal did not close. It could be for financing, due diligence, etc. For whatever reason, right? But it's still a good deal, right? So I want you to do this instead. So try to make money from the deal. As a beginning syndicator, you're going to need cash, okay, for inspections, for appraisals, for earnest money, for attorney costs, all those things, and that money can add up. Why not, after you put your all this time and effort, traveling to the deal, getting it under contract, doing your due diligence, all of that, and then just passing the deal if it's not for you? No. Instead, I want you to try to make money from the deal. Okay, so here is the ideal deal to have, the deal with the right attributes to make money from, right? So if your deal that you're passing on is priced under market, right? If you could increase the rents and force your appreciation and is located in a good neighborhood, then what I want you to try to do is to try to wholesale the deal to another buyer. How do you do that? Well, another video will appear on the screen where we teach you this technique, wholesaling. All right? So don't just pass up on a deal and let it go if it's not for you or if it falls out of contract for whatever reason. Try to make money for it, especially if you are a beginning apartment syndicator. Got it? All right. All right, everyone. I hope you enjoyed this video. If you'd like to learn what our other students have learned about syndication, go ahead and apply to our Protégé program. We've helped students from the East Coast to West Coast, North and South of the U.S. do these types of deals, right? And number 2, go ahead and subscribe to our YouTube channel. Thank you for making us #1 in our space. It's because of you. And also, too, I'm going to put up on the screen a copy of our best-selling book, Commercial Real Estate Investing for Beginners. It's free, no obligation for you. All right, everyone. Thank you so much for hanging out with me today. I'll see you at the next video.